Hello one and all. So I've received some feedback from a member on my team who said I talk way too fast in these videos and I try and cover too many things. And that's some pretty good feedback, to be fair, actually, and I'm sure that many of you kind of would agree with that feedback. I cover too many things and I try and talk too fast in these videos. So this is a conscious effort on my part to talk slower and cover less things and better articulate on those less things what it is I'm specifically looking at. So I've had this idea to start this new kind of segment series thing I'm going to put out on either a Saturday or Sunday. It's basically going to cover 3 to 5 growth stocks that I'm looking at for the week ahead, give you kind of an overview of what am I seeing there, what am I looking for to actually form in the weeks ahead. Hopefully you have a fairly good understanding from other videos on the channel for what it is I'm looking for in terms of low pivots, mid pivots, high pivots from flags, VCPs, cup and handles, Davis boxes, all of that good stuff. So this video is going to cover 5 growth stocks that I'm looking for in the week ahead. We're going to do 2 advanced driver assistance systems. That's really difficult to say quickly. We're going to do 2 of those stocks. I'm then going to show you one big old boy that you would have heard about 1,000,001 times. Then I'm going to show you 2 semiconductor stocks. Then I'm already going to break my own rules of covering 3 to 5 stocks. I'm going to give you a wild card stock at the end, which is a cryptocurrency related stock, which looks pretty darn interesting to me. So let's begin with Mobileye. Now it is in the semiconductor industry group. And before I get into it, MarketSmith are the sponsor of this video, as you probably already know. If you're interested in a discounted trial, there is a link in the comments below. So Mobileye, it's in the semiconductor related industry group, which is currently very, very strong. It is ranked 2 out of 197. Now Mobileye is in the advanced driver assistance systems, which I think is going to see massive growth over the years ahead. Now it's a relatively new IPO. It's in a bit of a sweet spot for larger operators as the market cap is 35 billion. It's recently been building high lows and bouncing off this red line. What on earth is the red line, I hear you ask? Is the 50 SMA. So it's bouncing nicely, and the 50 SMA is an area where you'd like to see supported. That can be where the larger operators of the market step up, add to positions, initiate positions, support the stock. So it is a good thing to see. It is a positive thing to see a stock respecting its 50-day moving average. Now, what am I looking for in the week ahead? Well, I'm looking for a low pivot to form somewhere underneath $45. I can't tell you the exact level it's going to form. If you've seen some of the recent videos, you'll know that I like to look for trigger bars. So hopefully you have a good understanding from watching videos on this channel. What are the kind of setups I'm looking for? Low pivots, mid pivots, high pivots, pocket pivots from VCPs, cup and handles, flags, Davis boxes, whatever may form, combination of those, but that's what I'm looking at. So it could form kind of a downwards trend line, and you've got the pink line in here, which is the 10 EMA, and then also the green line, which is the 21 EMA. So I would like to see price tighten up around the 10 EMA and the 21 EMA, create that lower pivot, and ideally I want my initial stop loss on a stock like this to be sub 3 or 4%. So then I could actually look to try and free roll it. If you've seen that recent video on the channel, look to try and free roll it into the highs of the base. The recent live coaching video will explain some of that. Really good earnings, really good sales, after tax margins accelerating, stock is hitting on a lot of those CAN SLIM criteria. Now, same area of the market, advanced driver assistance systems, that's not getting any easier to say, is INDI Semiconductor. So this stock here, very strong. You've got Lord Abbett Developing Growth. They are one of the higher quality growth funds. You can go to their website and you can go see some of the holdings that they have as well. Now, in terms of market cap, this stock is a lot smaller than Mobileye. Market cap is 1.5 billion. So if they both set up perfectly, I would rather go for Mobileye because of the liquidity, and the company is also profitable. They have earnings where this stock does not. Albeit, I think this stock, it could be quicker in terms of the beta and the ADR, so it may be able to make a bigger move. It really depends how they set up, but it's another one on my radar. So there was a shakeout in the base here. There was then this really bearish day. It closed weak there on big volume, but actually it just kind of reversed the next session. Then it's just been pretty tight in here. The volume has been drying up. Looks to me like it's trying to come out of this phase 1 base and now form a stage 2 continuation type pattern, which is resembling more so a flag type pattern. So this is one where I need to see where the pivot forms, but somewhere between $10.50, and the higher the base, $11.12. But again, I need to see those what I call trigger bars, really tight bars, volume dry up, and preferably it is sat, that trigger bar is sat on the 10 EMA, which is this pink line here, and then the green line, the 21 EMA. So just see it come right down nice and tight. Let me give you an example of that. Let me talk to you about a stock you've probably never heard of. It's a little company called Tesla. Now they do something with EVs, solar, AI, robotics. They're a small company. CEO, no one's ever heard of him, kind of thing. But this small company here is on my radar. I was looking at it like I was dialed into this one last week because it was setting up. I know it's underneath the 200 SMA. Never buy a stock underneath the 200 SMA. Unless it's Tesla, and it's kind of setting up like this for me anyway. So it was getting, you know, when I talk about trigger bars, right, this here, do you see how tight this is getting? This is Friday, this is Thursday of last week, and the final bar you see there is Friday of last week. It was getting so tight in here, just putting in this really nice pivot. Look how the volume was drying up, and then you have a clustering of key moving averages. That's the pink line, the 10 EMA, the green line, the 21 EMA, and then the 50 SMA. See how it bounced really nicely off the 50 SMA, giving you an indication that large operators are supporting the stock. Then it bounces, tightens. This is just really constructive. I was actually looking just another trigger bar or two. That would have been really, really nice. So I'm not going to get FOMO. I'm not going to chase it up here. But what I would like to see is it put in another kind of tight pivot area underneath the 200 SMA. And now it cracked the $200 level, psychological level, if you've read Livermore's book, Reminiscences. What I would like to see, and I think how I'm kind of envisioning Tesla playing out, I think it's just probably more psychological than anything. I think it's going to kind of stumble around its 200 SMA, but that could create an opportunity for an opportunist like me. So what if it runs into the 200, pulls back to the 200, there's a lot of 200s here, isn't there? $200 price level, and then it starts to do this. Then it starts to tighten like that. That's going to get me really interested. Why? Because then what chart pattern do you see? There's the proverbial cut, and there is the proverbial handle, then tightening under the 200 SMA. Tesla, I think, could be really, really interesting. But this is probably one, it's probably back end of the week we're going into, maybe even to next week. But Tesla, I think, is a fairly good bellwether for the market. Let me give you two semiconductor stocks. So this one here is MPWR. You've got some higher quality funds who have recently been initiating and adding. You've got some that are decreasing as well. So it's a bit of this, a bit of that. What chart pattern do you see when you look at the chart? Oh, I see a cup. There's the cup. And then here is the handle. Nice shakeout off the 50 in here. Volume is generally starting to dry up. Consistent earnings, consistent sales, after-tax margins are high. And then you can start to see how it's building this pivot around $500. Now it's a little bit choppy. This one is an inside bar last Friday. The 10 EMA and the 21 EMA is there. You have a psychological level of $500 as well. So what I'm actually looking for is a trigger bar or two in here, okay? And then for it to break this downwards trend line where I can go in with a tight initial stop. Stock like this, I probably want to be 2 to 3% range for initial stops, and probably underneath $500 as well. So I want to be pretty darn tight on this one, and then by being tight on it, I can then try and free roll into these base highs or kind of local highs around $530. That is how I am envisioning it. And semiconductors are a strong area of the market, as is tech. Now, one that is a little bit quicker, a little bit more leadership. You can see here, RS lines are just pointing to the stars, which is always fantastic to see. You have a higher quality growth fund, initiated a position in the most recently reported quarter. So ACLS looks to be one of the leaders. Earnings per share ticking up. Estimates are pretty good, albeit guidance has come down. Earnings plus 63%, sales plus 29%, margins accelerating, hitting on a lot of cylinders. A few shakeouts within this base as well, but the stock has generally been respecting its 21 EMA, which is this green line here, albeit there has been a couple of shakeouts underneath. So what I am looking for here is the stock to pull back in to the 10 EMA and the 21 EMA, which are these wiggly lines that you see here. Pull back in, just start tightening up. Trigger bars come in, volume dries up, and it does something like that. So I think semiconductors At the moment, SMH looks pretty strong. I think there's going to be some opportunities there. So it's about trying to dial it in, try and time it a little bit with say the ETF as well, and then look for what are the strongest stocks, what are the best ones setting up, which ones do I think are more asymmetric in nature and can trend well as well. So you see how this stock trends well along its 10 and 21 EMA, albeit there is then a very big shakeout here. But it's an interesting one. Now let me give you a wild card one. So I think Bitcoin looks pretty interesting. I think I posted a chart on Twitter, phase 1 base breakout into a phase 2 uptrend, beginning to flag out. So Coinbase, you probably heard about Coinbase. From a price cycle perspective, it got absolutely obliterated. Okay, phase 4 declines. Phase 4 declines do not last forever. They go into phase 1 accumulation basis, and this is what I'm seeing a lot. I'm seeing a lot of characteristics that I would associate with a phase 1 accumulation base. Now, unfortunately, I can't zoom on the market Smith charts, but there was a gap down to the 50 SMA, which held really well. And you also have a bit of a confluence with the black line, which is the 200 SMA and the 10 and the 21 EMA. And prices starting to tighten in here. So now what I'm going to do is go down to the 60-minute chart, which is also known as the 1 hour chart. This is this gap down here. So you see how the prior close for the prior session is up here, and it gaps down, and this is the bar. Okay, I'm just going to draw it with an arrow. This is the bar here, and look at the volume coming through as well. Now, because it gaps down, shake out demand tail, and then recovers, see the strength of the next bar. Actually closes on the high there. That looks more so to me like large operators trying to shake out weak hands. Now, if you just look at this in isolation, what chart pattern do you start to see? Bit of a flag, bit of a VCP forming. Looks interesting. Again, this is why I said it's a wild card one for me. You actually have some good first 1 hour candlesticks coming through, which tends to be when those large operators, those bigger boys, are more active. Nice shake out demand tail in here. So it's still pretty volatile. The volume needs to come down a little bit more for me. Initial stop, I personally would not want to be above the ADR, 20-day ADR, and this stock is about 9.4% at the minute roughly. I would like to be half that for initial stop, so getting somewhere closer to 4%, and then try and kind of free roll into these potential base highs. So let me just draw it like this. Why did I go onto the daily chart? I want the 60-minute chart. So you see how you get this VCP action going on. It needs to tighten a little bit more under high 60s. $68 is kind of standing out to me at the minute. I'll see how it forms, but I just want to see it tighten up, volume come way down like this, and then see it get out. I then want to free roll it. Can I then sit for the intermediate term trend? So that's it, guys. I will wrap it up there. Hopefully you like me talking slower, covering less stocks, going into a little bit more detail on some stronger areas of the market. How I'm looking at these stocks. Obviously, they've all got a little bit of work to do. Mobileye is really getting my attention. That's one I'm watching fairly darn closely. I think that advanced driver assistance systems area of the market is very interesting indeed, and likely to have a lot of growth ahead of it. So I'm now rambling at the end of this video. Thank you very much if you made it all the way to the end, and I will see you in the next video.